Hello guys, and welcome to all the viewers here today to pretty much what is going to be a consistent series that I'm going to bring to YouTube every Sunday before 10 p.m. UK time. And what it's going to be is just me giving an insight into a couple of currency pairs, giving my breakdown and my analysis and my views, just to give you guys a better insight into how I trade and how I do it. And I think it'd be some enjoyment for me to bring some content to a completely different platform that I've never used before. So again, apologies if the audio or the screen recording isn't up to scratch. It's something we will work on over the next couple of weeks to bring you an efficient and effective way of providing you with some quality content. So pretty much I'm here on my TradingView, which is NickLindleyFx on the screen now. And here it might be worth going ahead and following. It's where I provide some more longer term breakdowns. I'm trying to bring again some consistency to this platform and post at least one idea every week. So let's just go below and look at a few of the ideas that I posted last week. More specifically, my Euro to AUD breakdown. Let's go ahead here. And this is actually where I targeted an 80 to 180 pip downside target. I posted this on January the 27th. And it might be worth going back and just having a read of this description. I do try to provide a lot of information in my description on why I'm looking at certain trades, and give some sort of fundamental bias as well in there, although I don't like to give away too many of my secrets. But pretty much what I was looking here was for price to make new lows. It was a very easy setup to look for and to spot. As you can see, price formed a beautiful lower high across the 1.6 key level, which again coincided with a bearish Fibonacci retracement. And after a strong bearish candle close on Friday, it almost looks certain to drop. I know quite a few retail traders that would have taken this trade. It's always important to note as well is when something simple like this forms on a Friday, always be wary and always be careful, because a lot of the times it will be a market manipulation trap. For example, this setup here, as I will go into more detail and show you guys, was a bear trap initially. What usually happens is you probably would have had a flood of retail traders entering this short on Friday, and the market manipulators would have realised that. So on the open on Sunday night, they would have caused price to rise, taking retail traders stop losses, which probably would have been around a couple of these wick highs here, or even at 1.6. And once those stop losses would have been taken, then it would have been all sells from there. So let's go have a look what price actually did. Again, as we see, we actually came up. We had another retest of 1.6, probably stop loss hunting, and then price completely collapsed for the following 2 days, taking out my initial 80 pip target. And it is something that I am looking to drop further next week to fulfill my full 180 pip downside target. It's not a trade I managed to obtain last week, and it's not a trade I'm looking to enter this week. It just didn't enter that. It didn't offer that entry criteria that I actually look for. I do stick to my plan, and I do advise all of you to go and make up a trading plan and ensure you stick to it, because even if you do lose a lot of trades following that plan, you then know exactly what's going wrong and what needs amending. And it's actually something that took me a few years to figure out my own way of trading. So we're just going to have a look across a few of the pairs that I've highlighted. I'm actually just going to go break down 5 currency pairs this week on this video. I do initially trade only 9 currency pairs. I think it's vital to only specialize it in a couple, because then you know exactly how that price moves. You know the key levels, they're imprinted in your mind. It's much easier to get an understanding of how you believe price will move, instead of trying to juggle 20, 30 currency pairs where you're just out of control pretty much. So the first one I'm going to go over is this AUD yen. This is a currency pair that I actually quite enjoy trading. I do like the yen pairs. I think they offer some very exciting moves, and they do move often as well through the night as well as during the day, which means there's plenty of opportunity to trade. As always, I always start from the higher time frames. If I just zoom out on the monthly here, January's candle closed with a strong wick rejection of both 72 and 74 down here. And this is a zone, if I was just to go and highlight this quickly, this is a zone that has acted as support on many occasions. I'll just go here. So it's this zone here. We zoom out. We've got all of this back here that's been used. We had 1, 2, 3, 4, 5, 6, 7, 8 wick rejections, with price never really broken below it before, since May 2010. Now, this gives me an idea that this was a market manipulation move. Again, price had an absolutely huge downslaw. It had the opportunity to make new lows, but instead we whipsawed back after such a strong bearish engulfing candle. Ideally, what I would suggest happened here was price, because this all happened on January the 1st, because I was actually in a Euro to AED short, which I posted on my Instagram, again, NickLindleyFx. And what I think happened was on January the 1st, price had these huge wicksaws in the market. And it was likely that this was a manipulation move to obtain those big orders by institutions and banks, for then price to whipsaw and go in a completely opposite direction. It's also important to note here that price actually failed to make new lows. We broke 78 in the monthly key level here, but if I was just to go across here, we never actually really fell below these lows of June 2016. And the way I trade is pretty much against the masses. So the trades that I'm looking for is an overextended trend in a certain direction, and then I'm looking for moves to trade against that trend. So initially on the monthly time frame, this gives me an initial bullish bias, because we had the opportunity to make new lows, but we failed to. I could potentially see this in the long term. We could first take out 83, and then even higher to 88, and then if we are going for a full trend shift, full trend change, then we can go to 89 spot 99, and then maybe even higher in the very long term. However, let's go into the lower time frames and just have a look at those intraday charts. So heading down onto the weekly time frame, we can see that wick rejection a bit more clearly. We popped down as I said, the pretty much the last 31st of December, which would have headed over onto January the 1st when this whole move happened. And what happened is we whipsawed back. The following weeks here, we closed back above 78. The following week we had a retest of 78. We had the opportunity to close below it, but we failed to. Again, the following week we had another retest of 78, failed to close below it. And then last week again we had another retest of 78, failed to close above it, and price absolutely rocketed right above this area of interest, which acted as support on 2 previous occasions. Something that you guys probably do know is that usually when support is broken, it turns to resistance, and vice versa. So what I'm going to look now is heading into this daily time frame. We can see this area of interest a bit more clearly. The 2 occasions where we acted as support before, until eventually we finally closed below it here on the 21st of December. We actually then went up and retested it, used it as resistance on 2 days, rejected it, and then we had the absolute downpour where price then formed, as I say, this wick rejection. Actually on the 3rd of January, this one, we came down, tested, came back up, a strong bullish engulfing candle afterwards. Price came all the way back up. We consolidated between 7800s and this area of interest, which sits at around 78,738, until eventually on the 30th of January we managed to obtain a strong bullish close above this area, this area of resistance. To me then, I'm only kind of looking for a bullish trade, a long trade. And personally, I do think I've actually missed the entry on this. As I say, we closed above 78,738. The following day, we kind of just touched on the 50 EMA, which acted as resistance again, until eventually we had that retest of resistance with this wick, and we then closed with a strong daily above the 50 EMA, and I see this opening high and probably sending rally straight into the 80 key level. The reason why I'm not going to be entering any long trades on this pair is because I definitely have missed my preferred entry. If I just go in onto the intraday charts here, especially the 4-hour, we can kind of see this play a bit more clearer. See, my preferred entry would have been on the initial break of resistance, which was here, in this zone here. And then we retested, as I said before, resistance that is broken, then usually turns into support. And that would have been my entry to then hit a long trade. So let's go into the hourly here. We had the break above 7800s, which drove into these strong bullish candles. One here, a higher low formed, and then another strong candle here until eventually the retest came. Straight here, we pinpointed it and then put a strong bullish candle straight above the 50 EMA. If I was watching the charts at the time and this hadn't, this bull, if this offered the opportunity to enter currently, this was the trade I would have taken. I would have entered at this closure above the 50 EMA. I probably would have put stop losses just below, let's say 25 pips, so just below support. And I would have been targeting, anywhere above a, 1 to 2 risk to reward, which would have been there. It would have been a nice, quick and easy. It would have been a real nice, quick and easy 50 pip target to take pretty much a risk to reward of 1 to 2. Or if I was being a bit more ambitious, I would have traded it all the way up to the 80 key level and just managed to trade throughout, moving stop loss past entry and just securing profits by this time, which actually would have been looking nice heading into the new week. However, that's just my breakdown and thoughts on AUD Japan. Again, it's up to you guys if you decide to take this analysis and put it alongside your own and take a long trade. For me personally, there's no confluences and no opportunity for me to enter any long trade in the upcoming week. So heading into my next pair again is another yen pair. It's actually euro to yen. As I said at the start of this video, the yen pairs are pairs that I do enjoy trading. I do obviously alternate between other currency pairs, but I find that the crosses between the yen currencies just offer much more better trending markets or much more better volatility and opportunity for me to enter the trades that I look to place. Kind of following suit across AUD Japan, we had an absolutely huge wick downside, which touched 119 key level here, which again previously has acted as support. And instead of closing with huge lows, we actually whipsawed back up and looked to close a pretty weak bearish candle. This is actually a formation that you will see pretty much across all currency pairs. And this is why I believe it was a manipulation move. Was it literally happened on the first day of the market opening January, which I believe was the 3rd of January, which was a Sunday or a Monday. But it just seemed to be too simple to kind of call it was a manipulation move. Price moved so rapidly. I mean, when I was in euro to AUD short, price moved 400 pips within 2 minutes, and then it looked like banking institution orders were hit, and we absolutely whipsawed back within another couple of hours really. Now, what's actually interesting to highlight on this pair is this week rejection of 119 also fits nicely with a bullish Fibonacci rejection. So let's just go from one high to one low. We have the 61 on 123505. And if I was just to highlight that zone quickly, tying in with a few other Arams, that zone there would be the 61.8% fib rejection, also highlighting resistance here and a little bit of consolidation support here. It all fits in very nicely. It almost looks very kind of structured. So with this here, I believe that we can see some bullish momentum occur. However, it's not something I want to look into the long term with Euro Japan. looking into the intraday charts, which we'll get into in a second, it's very much a play that I want to hold in the short term. It's not a long I want to be holding for weeks on end. Heading in onto the weekly time frame, pretty much 12500s is highlighted on my chart here, because if I was just to zoom out, I did actually have a consolidation range highlighted. I'll just show you what I kind of had on this pair. So what it was it was 133, which is up here. Just sort this out for you. And it was resistance at 125. Let's just get those coordinates straight in. So this is what I was looking at originally. This zone it was a consolidation zone for a long time. We had resistance here, boom, come straight down, touch of 125, no candle closure between these two support and resistance zones as well. So we had 1275 in there and 132. We consolidated between the two, touch of 125, come up 132 with hardly any candle closure above 132, come back down, support of 1275 until eventually 125 was broken. Now I did take a couple of shorts when this was broken, which I will show you on the daily time frame. When 125 was open, I was thinking, okay, it does look like a trend continuation trade. I did take a few shorts around these retests of 125 here. I did take some small profits out of the trade because we didn't actually have that strong leg down from 125, which I was expecting a retest and possibly a hold down, fall down back down to 119, because I was subdued by the trend continuation patterns. But instead now my bias has turned to a long and bullish one, and now I'm only looking to place long trades on this pair. What's key to highlight on this daily time frame is how price was forming on a daily time frame. I mean, after we broke down 125 here, as I say, when support's broken, it usually acts as resistance. We came up, we had 1, 2, 3 rejections. This is when I took my short. The market gapped down. We had this huge doji consolidation candle, which actually managed, I think I closed my profits around the low of this candle, or it was actually the low of this wick, I can't entirely remember. And then price decided that it wasn't the time to make new lows. Instead, we formed a higher low, came back up, failed to make any new highs past this zone here. We went into some consolidation. We thought price may make another downfall after this candle. We thought, okay, it's decided its direction. We thought price could make some extensions down to these lows here after this strong bearish engulfing candle. But of course that didn't come, and instead price put in place a very strong bullish engulfing candle. Using the 125 as resistance again, we had 1, 2, eventually broke above it, acted as support here, 3, had a strong bearish candle here. A lot of people would have taken this short, I can imagine. A lot of retail traders would have taken that short, just merely based off the candle and the key level. But it's not something we were looking to do, because what price had actually done was take over these highs here, if I was just to highlight them. So I was classing this as a lower high, so when price eventually broke above this, it was okay. Price has broken bearish structure, which is very simple. Bearish structure is lower highs followed by lower lows. So if a lower high is broken, to me it suggests that the bearish trend has been abolished, and we're then looking to set up a new bullish trend. So for me personally, when this candle formed, it was more looking likely to take long trades as we formed a new higher low. And I'll just show that on the 4-hour time frame, because I did actually take a long on this trade, but unfortunately I was stopped out. Now the long I took was after this closure above 125 here, we found this resistance zone, so we came down, we formed a higher low here, we came back up, we had this resistance zone, we came back, we sat on 125, failed to close below it, had a strong wick, 1, 2, 3, 4, 5 candles failing to break below 125, and then a strong 4-hour bullish engulfing candle, which is actually what I entered on. So I entered here. I had my stop losses placed around 40, pretty much 45 pips from my entry, and I was looking for an extension up into around a 1 to 2 risk to reward, but instead, as price put some huge wicks, it failed to close above this resistance, and instead formed a very strong bearish candle, which ended up taking me out of my stop loss. See, that was a trade that I took last week. However, we now look strongly bullish in my favour. If I was just to zoom out slightly on this 4-hour candle, we can pretty much see a very simple bullish engulfing formation, which I'll just highlight here. So we have the initial increase in price from this low here, the formation of a higher high, which again was, you could pick any one of these 3 points here. I'll just use this one for example, and then we did form a higher low here. And if I was to even get a bit more technical, and just kind of suggest from the wick high, which was this one, up into the rally, yeah, see perfectly, a bullish 61.8 Fibonacci retracement, which was this zone here, pinpoint, absolute perfection there. There we go. We retested a 61.8, and ever since there it was really strong bullish candles. We know we had 1, 2, closed above 125. That would have given it the momentum it needed to then burst through this resistance right here with this strong bullish engulfing candle. For me then, I am looking to place long entries on this in the upcoming week. What I need to see is following what I've been saying this whole video. When resistance is broken, it usually tends to act as support. So what I'm looking for is price to retest this resistance, put in some strong candlestick rejections, which I will be eyeing on the hourly time frame. If I was just to zoom out, we can see this resistance a lot better. We can also see this bull run a lot more clearly here. Boom, boom, boom. Crossed above the 50 EMA. The momentum was there. Crossed above 125. And there was no stopping it. So as I was saying, what I want to see then is price to pretty much form some candlestick rejections around these, within this area here. I think an ideal long entry would be, let's just, for example, put it on around here, 125, 240. We can just double check the fib as well on here. So if I was just to take the rough higher low, which would be this bearish candle here, we can see that 61 to 50% fib retrace also falls in this zone here. So this is the zone, this blue zone is what we're looking to get an entry on. Now, a stop loss, I wouldn't be able to tell you guys at the moment. It's very unclear. I'd have to see how the candles form, because if we do see a strong close below this zone, it will then be 125 for the retracement. And if we do close below that, then I don't think we will be getting a long entry this week. But, I mean, anywhere for a stop loss, we could... 30 pips would be alright. It sits below 125. Yeah, so pretty much what I'd be looking for is a 30 pip stop loss. We could be targeting anywhere from 61 pips for a 1 to 2 risk to reward, or even further. It's up to you guys. But the play that I'm looking for is price to fall into this zone, consolidate for a little while, and then look for longs, which if I just look above on the higher time frames, an easy target to suggest would be 125,800, which would be extending the highs, and also coincides with this area of support that was previously used before. So we'd be looking for that. So if I was to use that as a target, a simple, easy long setup without getting too difficult and too technical would be something of this sort of idea. As I said, 30 pips stop loss roughly, straight up into these, sort of zones, we are getting a 1 to 2 risk to reward, which is satisfactory for me. It's kind of my minimum risk to reward that I use. Anything below I don't really trade. Anything above is a bonus. So heading into my next pair, it's actually the Great British Pound to the Australian dollar. This is a pair that I haven't been actively trading recently, just because it hasn't offered me the entry opportunities that I like. It has been a strange one recently, as we can see on the monthly time frame. If we were just to zoom in, we have been wick soaring back and forth for some time now. We definitely have some bearish trend structure here, from the highs up here to a lower low, lower high, lower low, lower high, until trend structure was eventually broken with a new higher low forming, highs forming, higher low, higher high, higher low, higher high. Now the 1.85 has been highlighted here because we touched it here once, came back down, 174, 2 touches, came up. It was just consolidating between these two key levels, and it still is to this day. However, what is significant to me is pretty much after finding support at 174, December's monthly candle closed with a very strong bullish engulfing candle, sitting above 1.8. And then January's candle had another retest of 1.85, which it rejected. We then looked to close as a strong bearish candle back into almost engulfing half of the previous candle. Instead, price actually pulled back up and sits just below 1.8. We failed to close below it. So for me, what this suggests is we've broken the 1.8 key level. We've retested it. We failed to break below it. And I think this will give the momentum and support it needs for then price to make another extension, at least into the 1.85 region. Heading into the weekly time frame, if I was just to zoom out, we can see this consolidation period a bit more clearly. The bias is very mixed. There's no clear direction. We had resistance up here, we came down, we had support. We had another dive into 1.74, acted as support. That fueled the rally. 1.85 was pierced, but shortly thereafter, price came back below it, had another test of 1.74, which led us into another rally into 1.85, which was respected. And last week's candle showed a clear wick retest and rejection of 1.8. If we were just to zoom in a little bit closer as well, we can see bullish trend structure forming. We can see this low here, then came up into a high into 1.8. A higher low formed, especially on the 50 EMA, which is not something I really look at on the weekly time frame. I use this EMA across the hourly time frame, but it can also act as areas of interest on the higher time frames. And then price extended its highs into here. So providing this level here isn't broke, I can probably even coincide this here. Providing this level here, which is highlighted, isn't broke, price is still in bullish trend structure. And therefore, for me, personally, I'm only looking for long entries. Heading in onto the daily time frame, we can see the retest and rejection of 1.8 a bit clearer with Friday's candle. I'll just zoom in to get some proportions here. So we had this 1.85 wick rejection here. We had 1, 2, 3, 4, 5 candles. 1.8 was then touched. We had the opportunity to break below that and the 50 EMA. Instead, price whipsawed back up and sits just above 1.8 here. Now, getting out my fib tool as well, we can just check this retracement and see if it does work out, which it does. We can see here that the 61.8% bullish Fibonacci retracement does act as support alongside 1.8 and the 50 EMA, which gives us three confluences of support on the daily time frame, also coinciding with that monthly bullish bias. It gives us that multiple time frame analysis, which is what we're looking to confirm a strong long entry. Heading into the more intraday charts, I'll just get up the 4-hour time frame here. We can actually see this downpour from 1.85 a bit more clearer with strong bearish trend structure. So we had the high up here on 1.85, comes down into a low. We then formed a lower high. So bearish trend structure is lower low, lower high, lower low. So we expected a lower low, which we did get. Touch of 1.8, formation of a new lower high here, which I have highlighted, and then new lows were formed. So on the intraday charts, we're still within a bearish trend structure. So what I need to identify is a shift in this trend structure for me to obtain the best long entry. And that's actually my entry criteria for all of my trades. So I head even into the hourly time frame, which is between the hourly and the 15-minute chart is where I'm looking for entry. We can see that this previous lower high, which is highlighted here, actually formed on an area of interest before. It also acted as a retracement range here before we came down and touched 1.8. We came back up into this zone, retested the 50 EMA, formed a new lower high, and made new lows. Now, if we were to look carefully, we could suggest that bearish trend structure has already been broken. Now, this comes in the form of this zone here, which I'll just highlight here, because what happened is we had our lower high form here. Price made new lows with this strong candle on February the 1st. It then put in place a very small lower high, which was a retest of 1.8. And then new lows were created, so this was still bearish trend structure forming. However, price formed a strong wick at about 1 o'clock, and then the 4-hour close shows at 2 o'clock showed a strong bullish candle forming, boom, right up, closing above that previous lower high. So that to me shows, okay, bearish trend structure on the lower time frames has been broken. That coincides with my overall bullish bias on the daily, weekly and monthly time frame. So then it's a case of then looking for long entries. Now what I can see price doing and what I will be eyeing for a sniper long entry is, let's just form that 61.8% fib. Doesn't really tie in with any of the levels that I'm looking at, so it's not really a tool that I'll be using. But I'll be looking for price to maybe make a dive back into 1.8, which would then show a retest of this broken lower high. I could then see price consolidating, wicking below, wicking above, wicking back and forth, with the 50 EMA then becoming tighter to price. And then what I will be eyeing to pull the trigger is price to hopefully close with a strong bullish rejection of 1.8, closing above the 50 EMA. Let's say it was somewhere around 1.802. And I will then be looking to place my stop loss anywhere, wherever these wicks were forming. Let's just say it was 40 pips here. And then I'll be looking to obtain at least a 1.2 risk to reward back into this region here. However, if we were to look across the higher time frames, if this region was broken, we can then look for 1.815, which would offer, a 1 to 3, 1 to 3.2 risk to reward, which is actually excellent, I think, with taking a shorter term trade. I mean, that would only be a 130 pip target, which I would be content with. So guys, that concludes this week's video, this week's market breakdown. I only managed to cover 4 pairs. As I said, I actively do trade 9, but the other pairs just didn't look to offer any trading opportunities for the week ahead. That doesn't mean I won't still be looking. I will still actively be analysing them every morning just to refresh my brain and refresh my bias for any potential trading opportunities that arise. If any do, as always, I'll be posting them on my Instagram, which is the exact same tag as my TradingView, NickLindleyFx. And if you can go over and give my Instagram a follow and give my TradingView a follow, I hope that the content provided will help you in your journey to becoming a self-sufficient Forex trader, and I do appreciate it a lot. If you like this video, please give a thumbs up. If it helped you, please give it a thumbs up. If you think it was beneficial, then please subscribe. I do apologise if it wasn't what you expected or wasn't up to scratch, but it is a series that I do want to improve. I want to look at getting a microphone. I want to look at bringing more effective videos to the YouTube channel, because I feel that it is a platform that there isn't much content for traders out there. I haven't seen another consistent YouTuber posting weekly market breakdowns, and that's something I want to be bringing to the table to aid you guys. So please like, subscribe, go ahead and follow my social medias. I'll really appreciate that. And I'll see you guys next Sunday for our weekly recap and weekly analysis for the week ahead. Have a great trading week, guys, and see you soon. Thank you.